Oh, what is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some quick stock analysis on Soundhound stock because this stock shot up quite a bit today. As we're going to see here, this stock is up 20% today. And it looks like, according to Qualtrim, the main reason for this is that software companies are trading higher following the Q1 financial results by the peers with these other companies. And it is increasing confidence for these other stocks as well, like Soundhound AI. This stock has had a lot of volatility. It peaked out last year at $21. Recently, it was as cheap as $6. Now we're up to over $9. So there's been lots of volatility here. I've never owned this. It's definitely an interesting stock to me, but I am kind of picky when it comes to stuff, and I really like to see strong financials, and I really like to feel safe in the company that I'm in. So, when I look at these numbers, let's say obviously the growth is outstanding. Look at the last 5 years. They're doubling their money. They're doubling their sales every year on average for the last 5 years. 168 million in sales. It's only a $4 billion company. I mean, that's kind of honestly, it's kind of rich. A price of sales of 24 is a lot. I mean, if you look at their profitability wise, I mean, net income is bouncing around profitability. Free cash flow is negative. And so I really like to see positive EPS. If you look at analyst estimates, we're looking at negative EPS for at least another 2 years, probably 3 or 4 years. And that's a little bit of a concern to me because that means they're going to have debt and they're going to, increase their share count, all this stuff. But the growth is obviously there. They're in a good space. If they have a solid technology that is not easily replaceable, which we're going to get into, then who knows? Maybe they get acquired by Microsoft or Google. Maybe they, continue to grow, form big deals, and lock in lots of big customers. This year, we're looking at 37% growth expected, then a drop to 20%. Not sure what's the big thing behind that, but they're going to need to do a lot more than 20% growth if they want to keep that high valuation and grow into that. So, as of the last quarter, they're going to report earnings in next week, but as of last quarter, they grew revenue 59%. Or non-GAAP EPS was negative even, and they have a massive cumulative subscriptions and book of business backlog estimated to be over $600 million, though converting this remains the primary challenge. That is a bit of an issue. So, unlike competitors like Google, Amazon, Apple, who use a speech to text to meaning pipeline, meaning a two-step process, SoundHound does speech to meaning. So maybe their AI is a little bit smarter. They process audio directly into intent in a single step, reducing latency, improving accuracy. Great, fantastic. Like cars drive-throughs, these brands like Mercedes and Hyundai and restaurants prefer SoundHound because it allows them to maintain their own branding and keep their customer data. Panda Express uses this, I think. I'm pretty sure my TV, my Vizio TV, I'm pretty sure the TV uses it. So there are definitely out there. The agentic AI can run locally on devices and vehicles without needing a cloud connection. Great. This is saying sales is going to grow 45% in 2027. So I'm not sure why these analysts have way different numbers, but we'll see what happens there. Average price target is $15. It's 9 right now, so definitely some money to be made if it gets there. And of course, a negative PE. Stock can reach a forward PE of 300. Okay. The company has used stock offerings to raise cash, like I said, for these acquisitions, and that's not helping. Then we have these other LLM providers are improving their voice capabilities. Who knows if they can actually compete with that? Then we come down here. They have first mover advantage. And we have what else? They have patents on speech to meaning, which that's nice, but that doesn't, I don't know. I think you can get past that. The competition barrier makes the AI significantly faster. In a fast food drive-through high-speed card, 1 second delay, competitor, blah, 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 blah. I guess, I don't know how much I really buy into that. They are integrated into point of sale systems like Toast or Oracle. That's good. Once a restaurant chain has their AI taking 50,000 orders a week, there's definitely some switching costs. If a car company uses Google, Google uses their data and branding. So that's another one too. So they definitely have a couple things. They recently partnered with OpenTable for reservations, Parkerpedia for parking. The car manufacturer doesn't just use the voices, they also use the built-in ability for the driver to say, book a table at the nearest steakhouse. That's pretty cool. Magnificent Seven, Google and Microsoft could eventually offer their AI for free. That's true. See, and that's why I don't know if I would buy into this. They really this company has to really do a lot to compete with Gemini, Claude, all these other LLMs, and it's hard competing with companies like Google, Microsoft, Amazon, Apple. It's hard to compete with them because they have so much money and they could operate a lot. They could operate a lot of businesses at a loss because they have so much income and cash flow. So I don't think I would buy a company like this. I mean, it would have to be at like a dirt cheap valuation, and we're nowhere near that right now. So that is my analysis for Soundhound. Let me know what you guys think down below, and I will see you in the next video.